we thought we would have Nik Modi from Royal Bank of Canada to start off. He's an analyst who follows the industry, he follows the strategics and what they do, to give us some background with regards to what the big players are doing from Wall Street perspective. And please join me in welcoming Nik Modi. Thanks.
Thanks. What I wanted to do is just talk about some themes and trends that are going on in the industry that have a bearing on how the strategics or how you should think about M&A. So, just kind of listing these down really fast. Across CPG generally, spirits has, the superior growth. I mean, you can see here dramatic difference between, and I cover everything. So I follow food companies, I follow beverage companies, tobacco, beauty, household personal care. And you can see that the spirits industry has very superior growth. The second thing is when you think about big M&A, there's not a lot that can still be done. I mean, there's a scarcity of publicly traded assets out there, especially when you think about some of the other subsectors I follow, like food or household personal care. The spirits industry is levered to, I think, one of the most dramatic themes and trends out there that I think will persist for quite some time in an economic downturn or an upturn, and we can talk about that in Q&A if you're interested. But trade up, I think trade up is structural. I think it's psychographic, and the spirits industry is very levered to that very important trend. Valuations are near high, so you can see here, looking across some of the big strategics, the 10-year average PE, then the kind of the forward PE, and you can see here that the average relative to the 10-year is significantly higher, right? So we're operating in an environment where a lot of these valuations are above where they have historically been. Now, part of that is interest rate driven, okay? So when you think about publicly traded stocks and interest rates as low as they are, that's partly driving. But the other thing that's driving it is superior top line, which we talked about earlier. Another point is what I call the 3G philosophy avoidance has paid off. So when you think about the general consumer products goods industry, generally speaking, many of the companies have been cutting costs as they try to mirror 3G in terms of how to create value. Cut costs, improve margins. That worked for about 2 years. The spirits industry has actually avoided that trend, broadly speaking. So what I did here is I looked at Kraft Heinz as an example, okay, who's owned by 3G versus the spirits average. And this is selling and marketing expenses as a percentage of sales. And you can see the trend. Look what's happened to the Kraft Heinz coming down, whereas the spirits industry, broadly speaking, has gone higher. And that has helped support a very healthy top line. The next point, okay, is, and obviously we have two very important people to talk about this theme, is big spirits companies are creating venture arms, right? So what we're seeing is deals being done at very, very early stages, and that's becoming a more frequent phenomenon. A couple other deals, thoughts to talk about. Big deals are being issued by investors. When Constellation announced their Canopy stake, the stock took a nosedive. It actually hasn't recovered since. But we can see that in other industries as well, where big deals are really not looked favorably. So that's why a lot of these bigger companies are looking at smaller bolt-on deals as a way to create value. Big companies not only buying smaller assets, but they're also getting rid of brands. So you think about Diageo and its asset sale, Constellation and its asset sale, and Brown-Forman. And the interesting thing here is a lot of these brands that are being divested are not in the premium tier of the segment. So you can see that companies are really taking this trade-up phenomenon, and I think many of them view it as structural. They wouldn't be making portfolio changes like they are right now. Focus on craft and suppliers in the very early stages of development. We talked about that. Craft distilleries right now numbering in excess of 1,300, growing at a 40% clip over the last few years. So, this is going to be a trend that's going to be around for quite some time. Last 2 points on just big picture trends and themes. The spirits industry is positioned well in what I call today's narrative-based brand building environment. It is no longer the companies telling you why you should buy their brand and drowning out the competition and you buying their product. That's how P&G built their empire. That's how Kellogg's and General Mills built their empire. Today, it's all about your trusted network and the narrative, right? The story behind the product, right? And the spirits industry is really levered to that when you think about the rich histories of some of these brands and the process in which these brands are made or these products are made and the narrative that can be told. They are very social media friendly. We see this in wine. We see this in beer. We see this obviously in the spirits market with bourbon, tequila, and scotch. And the last point is distributor consolidation, making it even more important to have scale, right? So it's tough these days as a small brand to get some of that mind share from the distributor, which being part of a larger organization could be advantageous. So just real recent M&A activity in spirits, and I thought I'd just list some of the most recent things down, and you can see kind of the reasoning, right? So Constellation and their recent deals, growing their craft spirits business through their venture arm. Pernod enhancing their portfolio of super premium gin, and you can go down the list. But I think the most common theme there is A, companies getting into subsegments for the first time, or B, really getting some of these smaller local brands into their portfolio with the hopes of building them into the next mega brand in the future. Here's the thing, right, is that obviously if you think about some of the biggest categories and you think about how fragmented those segments still are, so there's a lot of opportunity to consolidate and to acquire and to consolidate either through own brand building or consolidate through acquisition. So you think about the top 5 brands in vodka, whiskey being about 34-35%, and the all others. That's big. I cover again probably 270 different categories from diapers to scotch. Okay, and I can tell you that the brand fragmentation in this industry is one of the highest I've seen. It's actually more fragmented than the prestige beauty market, which is incredibly fragmented. And you think about all the new brands coming out in prestige beauty. So this is, when the big strategics kind of look at the level playing field, it's like kid in the candy store. There's tons of opportunity out there for them. So there's a lot of competition. Okay, one last point. Next slide. We're talking about craft spirits or spirits, right? The reality is that's not the way we can think anymore. It used to be you versus, beer and wine and spirits. Like I hear this all the time. I go to every conference out there and it's like, I'm at a beer conference. It said, wine and spirits are taking share. And I'm at a spirits conference. Like we're taking share from beer. And the wine conference, we're taking share from beer too. Poor beer. Next slide. But the reality is everything is converging. We need to start reorienting our minds from an M&A perspective, from a brand building perspective, from a strategic perspective, away from categories and towards occasions, because everything is starting to converge. So think about it. Is this soda or water? Right? We have a lot of sparkling seltzer and flavored sparkling waters. What is it? Is it a soda? Some of these brand products have the same sweeteners as Diet Coke. Is this coffee or water? Is this beer or spirit? Is this wine, beer, or weed? And my favorite, is this cannabis or pain relief or dessert? But the point being, is product categories are converging, and consumers are now starting to think about things in relation to occasion and function versus category. So I'll stop there and pass it on to Nick. Pass it on to Harry. Sorry.
All right. Thanks, Nick.